Hello, welcome to our third edition of Kev Thinking Out Loud, our video blog. And in this edition, what I'd like to talk about is recession and stock markets, and try to make meaning of what a recession is and what we should expect, or what normally happens historically anyways with respect to stock markets in recessionary periods. So what is a recession? A recession is defined as 2 consecutive quarters of negative GDP growth. GDP is the gross domestic product of a nation, and therefore a recession is 2 consecutive quarters, or 2 consecutive 3-month periods, where the economic output of a nation declines rather than grows. Now, it's important to recognize that up till recently, in 2008 anyways, that it doesn't look like a recession was actually underway in North America. And that would be the case because the first 2 quarters in 2008 did not produce 2 consecutive negative GDP quarters. However, with the onset of the credit crisis, or the acceleration of the credit crisis that started about 5 weeks ago, it now seems likely that a recession is either underway or that we're about to enter one. So, are they normal? How often do they happen? Recessions happen roughly about once every 5 years. And this information I've found in the National Bureau of Economic Research, which is a U.S. think tank that researches business cycles historically. And it's identified since 1850 32 periods of recession. So roughly about one every 5 years. What's interesting though is that since the Second World War, the business cycle has stretched out a little bit. It's now about a 6 or 7 year cycle on average, and recessions still though happen about once every 6 or 7 years. The duration of a typical recession, since the Second World War anyways, is about 10 months. So the thing is that by the time you get the data to confirm you're actually in a recession, remember you'd have to have 6 months worth of data, you're actually halfway through a recession by the time you even know that you're in one. So what is the relationship between a stock market movement and recession? Well, history shows, and I think this recent period also is falling in line with this, that stock markets have a way of predicting recession. Stock market's what we call a leading indicator. It has an uncanny way of telling us what is about to happen, not what has already happened or what is happening as we speak. And even though the credit crisis saw the stock market sell off further, even after the bailout packages in the US and around the world were announced, the stock market can still continue to sell off for another couple of weeks. And I believe that that was because the stock market had to price in a recession, which we weren't in up to that point, but now seems imminent. So the stock market had to adjust to the fact that a recession is likely underway. So what does history say we can expect with respect to recession in stock markets? Well, it's interesting to note that stock markets don't generally recover once a recession ends. They normally bottom out and begin to recover in the midst of a recession. And if you recall that the stock market is a leading indicator and looks at what is about to happen as opposed to what has happened, at some point it'll look out 6 to 9 months, and investors on average will recognize that things are about to start getting better, not continuing to get worse. So what we notice is, if you look at history, is that the stock market normally starts to recover in the midst of a recession. Then at least to some oddities that you can see in the media and in the markets, we could see situations like we have in the past recessions where a company may, for example, announce layoffs, production cuts, or significant downsizing, and the same day or within that time frame of them making those announcements, you can see the stock price actually go up for that company and for the market overall. Well, why does that happen? If the downsizing is taking place, then why should the stock market react positively to that? Well, investors basically would see that if they believed that those things were necessary to restore profitability or improve profitability of that company, then it means that things for that company are likely going to be getting better in the future with respect to profitability. So therefore the stock price, which may have already sold off, may start to recover. So don't be surprised if you see some negative news taking place that is associated with recession, but don't be surprised if the stock market seems to behave in very unusual ways, in other words, go up in the same period. So will a recession happen again? Well, I think I've already mentioned that it's a very normal occurrence. if not unpleasant. So I can pretty well assure you that it's going to happen again if you keep in mind that it happens once every 6 or 7 years. In fact, many economists would say that a recession is a normal function of a healthy capitalist society, and I would happen to agree with that. In fact, even though it's very unpleasant, don't get me wrong, there's going to be dislocations amongst people, companies, and so on in our society. But a recession is an event that allows for renewal of an economic of a nation's economy, and it sets up the next stage of growth. It's like hitting the reset button, allowing the excesses that were there to be wrung out of the system. Labor will start to move. Unemployment will probably go up, which it's unpleasant, unfortunately, for those that are unemployed, but it's also a necessary catalyst to get labor to retrain itself and move towards more productive use. So I can assure you that if we're invested for another 20 or 30 years, we're probably going to have 5 or 6 more recessions. So please keep that in mind as we watch the news unfold before us over the next 6 to 12 months. Just recognize that even though some of the headlines may be different, we've certainly been here before if we're talking about recession. Thank you very much, and I look forward to talking to you again soon.